Guys, welcome. I'm Jake and Fox, Thrivent representative. Zac Obrien, business partner, and that is Amy. She is our, she's the one that keeps us together. Before we get started, we'll start off with a prayer. I'd ask the pastor if he would give us a quick prayer, and then we'll get started. So, before we get started, how many of you are Thrivent members already or familiar with Thrivent? Okay, so first slide. This is Thrivent in a nutshell. We're an organization of Christians. We like to help our clients with their money to produce living generously, which helps our members and families and their communities thrive. So we're big with helping our members be wise with their money. And also, in turn, living generously is a big part of what we do. A little bit more about us. We're 100-plus years old, so we've been around for a while. Membership only, we have more than 2 million members. Number 318 on the Fortune 500. I like to tell people volunteer hours, 11.3 million hours. That was in 2016, and we donated a little over $217 million to help others. So we're a big component of giving back and helping our members give back to their communities. We earned AM Best Superior Highest Rating, Fitch's rating, and named one of the world's most ethical companies by Ethisphere. So that's a little bit about us. We did start in a Lutheran church, so we're a little more well known in the Midwest, I'd say. Zac and I, we work out of Advance. Our office is there. We've got clients as far as Burlington, and then the other way as far as Asheville. So we cover pretty good territory on 40. The number one reason that I work for this company is the faith. I'm a pastor's son. My grandfather's a pastor, my brother, and about 4 of my cousins. So being able to talk to my clients and our members about our faith, and to be able to console someone that's lost a loved one, and to bring that spiritual aspect is the number one reason why Zac and I work for Thrivent. It's a big part of what we are, what we do, and we really enjoy getting together and coming into churches and discussing a little more about Thrivent and what all we do offer. Tonight will be a big part, will be long-term care. We're going to discuss what long-term care is. We're going to give you a brief overview of what to look for, what are some questions to ask, and how a long-term care plan is needed by everyone. So what is long-term care and what is not? So when you hear long-term care, what do you think of? These are non-rhetorical. So nursing home. What else? You get to write that down. I'm going to make Zac do some work. Kevin, be on standby. If his writing's sloppy, you're up. Yeah, so, and it's a good way to put it. So is anybody here currently a caregiver or has been a caregiver in the past? Okay. So there's quite a bit to being a caregiver. Little brief story about me. My grandfather just passed away 2 weeks ago. About 9 months ago, my grandmother passed away. These are both my dad's parents. My dad was the caregiver for my grandmother for about the last 3 years, and my grandfather about the same. Watching that personally was a big eye-opener for me as well as my family, but also my father. So I've been doing this for 3.5 years, and my dad's at the point where, he's been pastoring the same church for 36 years. And mom and dad are getting to the point where it's time to start looking at some long-term care and what's the plan. And dad's always kind of brushed me off about it. He's like, we'll get to it. Well, about 2 weeks ago, Dad was like, we need to talk. I was like, if I can get you to talk to me, I can get anybody to talk to me. But it's Dad going through that and being a caregiver, as well as my aunt and uncle, it's very rewarding, I could see that from my dad. He was very proud. My aunt and uncle, they were very proud of being able to take care of their parents. But it's also very emotionally draining, and it's very financially draining, and it's very stressful. Because my dad is a pastor. He is not a nurse. My sister is actually a hospice nurse. So my sister was a big part of that as well. Even though she was a grandchild, she was a huge part of my grandpa and my grandma being able to stay in their house. Because that's another part of long-term care. We want, it's not just nursing home. There's a lot of different facilities that we can get into. And, my mom and dad, with their plan, they want to stay in their house as long as possible. And I see that a lot. Wanting to stay at the house as long as we can. So it's not just about your future, finances and feelings. It's about the family. Having a strategy in place gives your family the opportunity to care about you rather than caring for you. So that's what we're talking about when it comes to the emotional and the strain of taking care of somebody full time. Because it's going eventually, a lot of times it starts out maybe helping them get the day started, and then it turns into full-time care. And that's where long-term care can really help bridge the gap between what you need and what you want, what you can afford. Because that's what the plan is. We're not just talking, this is not an insurance talk right now, this is a plan. Long-term insurance is not for everybody, but a long-term plan and long-term care plan is for everybody. So we want to keep that in mind as we go through this. I'm going to fumble through that slide. It's what you'll experience when you become physically or cognitively impaired. So long-term care, what are some things that you think about when you think about impairment, about stuff that you would need long-term care for? I like to get people involved and get you talking about what are some things that you think long-term care helps, or what are some areas that you think long-term care can do? Because a lot of times, like you said, you just think of nursing home, but these plans can do a lot more. And a long-term plan can mean maybe I need help getting over a broken leg when I'm a little older in life. My grandfather broke his hip at 84. My uncle broke his at 38. A lot easier for my uncle to get over it than my grandfather at that age. So there's some things to think about. Long-term care is not something, I had it explained to me one time. Long-term care is teaching you how to live the way you are, living with what's happening, instead of medically where you're trying to get better. And a lot of time you think of stroke, Alzheimer's, and stuff like that. That's where you're kind of relearning how to live through certain things, and that's where long-term care plan can really help alleviate a lot of stress with the family.
What we found with long-term care, especially in families, is the standpoint when there's multiple children, a lot of times they don't have a plan put in place before the situation comes about. One of the siblings takes on a bigger role, and all of a sudden that sibling that takes on a bigger role has resentment towards their sibling. And then all of the siblings that might have had a pretty good relationship, all of a sudden are all fighting about, well, I had to go take care
having that tough conversation with the family to create the plan and create what you would like. Maybe you get to the point where you're not able to speak for yourself and what you want to do, but they already know the plan and know what your wishes were and what you wanted to happen. That's the hardest part is discussing it with the people that's going to be caring for you. And then there's, back to it, there's 3 primary levels of care that a person might need. The first one is personal care. That's often provided by the spouse, the kids, and, that's more the in-home and consistent of, helping you with activities of daily living, bathing, moving from chair to chair, eating, cooking, stuff like that. The next level was intermediate care. That's where, skilled nursing care, adult daycare, or somebody may come into the house. And then the third level is the skilled care around the clock. It's getting where we need a lot of care and a lot of help. Another example, my mom's grandfather, my mom's dad, actually, my grandfather, was a big man. He was 6'3", he's a pretty big boy, about 240. My grandmother was 5'1" and 100 pounds soaking wet. It got to the point where she could do a lot of the stuff for a little while. He had lung cancer. But when it came to the point where she had to help him out of bed and help him, bathe, that put a lot of stress on grandmother. So he had to eventually go into, a hospice house or skilled nursing care. But, they had, again, a lot of help from people in the family. We've got a pretty big family. And that's where it goes back to the plan is what does it look like? How are we going to accomplish that? And, the biggest thing is how do we, making sure we get our plans and our goals spoken so we know what's going on. And then we work around that. Like, how can we afford long-term care? Can we do it, do we self-finance? Do we do other things? And making sure that we get the goals accomplished and make sure we get it taken care of, like you said, to that last part of protection of what you've got.
Anybody final any goals is, and anybody final 6 of them are by most definitions of long-term care.
So a lot of times where we call them triggering events, where a long-term care insurance or, what happens is a triggering event causes them, that's when you need help. That's when the policy will kick in. And what happens is two of the activities of daily living you need help with. Bathing, dressing, transferring, feeding, countenance, and toileting. So those are the 6 where some policies have you have to be able to have help with 3, and some are 2. It just depends on the policy you have and what you're looking for. And those are some questions you want to ask when you're shopping this around or shopping a long-term care. Is what are some of the triggering events?
4 cognitive impairment.
Yep.
So Alzheimer's, dementia.
These are standards for ADO. These are all things that this is standard. 2 out of 6.
2 out of 6 is the standard anymore. Some of the correct. That's when most policies, anything that's been written in probably the last 7 or 8 years, is going to be pretty consistent. Anything that was 2 out of 6.
So the 70% of people that are 65 right now will need long-term care at one point in their life. 70%. And the problem was, in 1940, age of 65, there was a plan of 13 years after 65 was the plan. They had it, you were going to live 13 years after your age 65. Anybody 65 and older now, you're going to live, a male's going to live, I think 19.3 years, and a female's going to live 21.6. So from 2015 to 2055, the number of people that will be 85 and older will triple. There's 6 million right now. There'll be 18 million people age 85 and older by 2055. That is a staggering number. Staggering number. And then, it goes back to, there's, not to dwell on the numbers, but let's face it, long-term care is, it costs money. And just like everything else, the cost is anticipated to rise. Like it's showing here, the historical inflation cost will exceed $286,000 in 30 years. So obviously this could put a dent on retirement planning and how you've retired for what you've looked at for retirement planning. This is a big part of it. Long-term care is a big part of, everybody's going to need it. And I can't reiterate that enough. And seeing it firsthand in my family, you need a plan. And you need to make sure that your family is aware of your wishes and your plan. So how will you pay for it? There's four major ways that we see people pay for long-term care. Relying on our family to pay or provide our care. We see a lot of that here. The family helps provide the care. The biggest thing with my family, my sister is in charge. She's the oldest, and she's in charge. And when I talked to her about this, it was a big thing because she's seen it firsthand. Being a hospice nurse and being around these families with people that are losing their loved ones, you see the emotional side of it, but you don't see the physical activities that you have to do as a caregiver. And that's one of the biggest reasons I talked to my sister about it, because knowing my sister, she's going to literally kill herself taking care of my parents. And I know that. But what we put in place is she's going to be in charge of picking who takes care of our family, who takes care of mom and dad, where they go, who's going to bring them in. And the great thing about that, not everybody has a hospice nurse as a sister. But with us, you have a care coordinator. And a care coordinator is huge. We deal with them quite a bit. They take care of knowing the area, what facilities are the best, what facilities you're looking to go into. They take care of the stuff that we don't, as normal people, we don't know to ask the administration. Where's the best nursing care, how to get them in there, help them with the paperwork, and helping take care of your loved ones. You get a care coordinator that's really big and really, really educated in this side of long-term care. So that's a big part of it too, is making sure you have somebody you trust and that is going to have your best interest and take care of you. We see government programs. A lot of times I hear Medicaid or Medicare is going to take care of us. Don't count on that. You're not going to get a whole lot of help from Medicare, if any. And Medicaid, you got to do what's called a spend down, pretty much, where it's going to take all of your assets that you have to be able to get into whatever facility is Medicare approved or Medicaid approved. brief hit on what Medicare does. It only kicks in after a 3-day hospital stay. Full cost of skilled care for only 20 days, partial cost from day 21 to 100, and only as long as the health improves. Does not pay for personal or custodial care, and home health care benefits are very, very limited.
So Medicare is part of it, but Part A, Part B is a part of it. And what a lot of people think is, well, if I have surgery, I'm going to need in-home health care, and I'm going to come to the house for surgery for hip replacement. Happened to a client a couple weeks ago. Said, no, it's not. You're going to get better from hip replacement. And the way that Medicare looks at this is we're not paying for things that you're going to get better from. That's what long-term care and Medicare are very different. And that's why I said earlier that with long-term care, it's for something that you're going to live with forever. It's not something that's about to change. You have hip surgery in bed for 2 weeks or 3 weeks trying to get ready and get better. You're planning on getting better. It's something that is they see and they know that you're not going to change for forever. That's where Medicare would come in and help out. From surgeries and things like that. Part A, Part B is what the Medicare supplement plan right now is the best insurance look at. For the cost, especially if you went from being somebody that's 63, 64 years old and having to pay for health insurance right now, current environment that we're in, people who are sitting there, it blows people's minds. $2,000 or $3,000 for a hobby level. So basic for a individual plan in North Carolina for health insurance. And so if they get Medicare, Part A, Part B, they're really excited to get there. It's a great insurance policy and a great health insurance plan, but it is for health insurance when you are getting better. It's not for something that is going to be there forever.
And then Medicaid is obviously the federal and state programs. Each state has its own eligibility, and in most cases, individuals' income must be less than the cost of care. So that's where a lot of times where it's going to bleed through those assets. It's going to take everything you have. Providers have control where how the dollars are spent. Things to consider: do you have sufficient funds available to pay for care? Is there a chance that your spouse may need to alter his or her lifestyle to help you? Do you want to pass on money to your family or to a charity or church? And have you talked to your family about providing your care? Those are things that we're going to, we've talked about it a lot, and I'm going to say it a lot. That's the hardest thing is having the conversation. It helps protect your family. Paying benefits when you need care. Long-term insurance provides you the freedom to choose your care. That's the biggest thing we want to do is help you choose your own care. How do you want to be cared for, and what does it look like for you? Depending on Medicare and Medicaid, you're not going to have a whole lot of options. You're going to be limited. Giving you access to a care coordinator, we talked about that, and helping your family supervise and provide the appropriate level of care. So when you get a long-term care policy with us, it's not just we're going to tell you what to do and where to go and how to do, and that's it. You're going to have options. You're going to have a coordinator, and you're going to have your family involved in how and what you want to be done. And that's important to know with long-term care is what the biggest thing is you want to ask. What are some of the benefit periods? What's the elimination period? What are some of the triggering events? You want to make sure that you know the policy very well. You want to ask the questions, be educated on exactly what you're paying for and what the insurance covers. The big thing with Zach and I always want my members and my clients to know exactly what they bought and why they bought something. I never want them to be out somewhere and somebody asks them why they have something they don't know. And it may be different. Everybody's plan and everybody's goals are different. Everybody's strategy is different, and products don't work for everybody. But I want to know exactly why. I want my members to know exactly why they have something and what it's for. When you become chronically ill or cognitively impaired, two of the activities of daily living, they're expected to at least 90 days. So a lot of times we see a 90-day elimination period. So what that means is, after the 90 days, that's when your coverage will start. So that's why we see a lot of times we want to make sure we have, 3 months of bills, and then that's when the long-term care is going to kick in. That's what that means by elimination period. No.
Does anybody know what partnership is? Anybody heard of it in the context of long-term care? So, like we talked about, you have to spend all your assets down, and the state and Medicaid step in and help take care of you, right? So, states looked at all this, took all this data, and they said, all right, forget this. If people will buy some type of long-term care insurance policy, we will make our state a partnership state. What that means to an individual is, let's say their long-term care policy covers $120,000, covered them $10,000 a month for 1 year, and they spent all $120,000 of it, but they still needed care. Well, the policy's gone. Before partnership stepped in, you had to spend all your assets down and have $10,000 left and now Medicaid. Well, they said, you know what, this person has done us a favor. He saved us $120,000 to save. They bought their own policy, they took responsibility for it, and they went out and did it. So North Carolina, the partnership state, which states that that $120,000 you keep for your family disappears from their eyes. Medicaid is saving on purpose. So if you had $200,000 of assets, now you only have to spend out 70 of it instead of 120 or 190,000. Sorry, you can keep that $120,000 and you can keep your family. Partnership is an important part when you're looking at long-term care that they qualify for it. Because there are certain things, age requirements make it different. If somebody is under the age of
60.
61, they have to have 3 or 5% compounded on it. From 61 to 75, they have to have a 1, 2, 3, or 5% compounded on it to qualify for partnership in North Carolina. And over the age of 76, you don't have to have any of it to qualify for partnership. But those are things that conversations we have to have, and we have to have knowledge on it. If you don't know, how are you going to ask the questions? We were talking about a few minutes ago before we got started about property and qualifying for forestry. I know it's a little random, but you don't, we were talking about, you know, to ask the questions, you don't know that it's available and out there. Things like that are so important. Why it's important to sit down with people like Jamie and I and go through these and ask the questions and really understand what's going on. This is something that's really important for our clients. Again, long-term care insurance is a nice piece to have. This is not a plan. The plan is whatever you and your family have come up with and what you guys are going to be okay with. Put your head down on your pillow at night and feel comfortable about it.
It's also what you can afford. I mean, let's just be honest. What can we afford, and what's the plan from there? I mean, I tell people all the time, we're not in a position of putting you in something that you're not comfortable with and you can't afford. That's just bad planning. You know, each situation is very different, and long-term care is becoming a really big issue. That's why you're starting to see, you know, federal and state help programs such as the partnership program, because they're losing an enormous amount of money on facility care and nursing care. I mean, it's unbelievable. I mean, I'm surprised, and we may see it soon, they're going to start requiring long-term care. It would not surprise me if that happens, because it's becoming an epidemic with how much it's costing them, and that's why they do those partnership programs. But the biggest thing is we want to make sure that when we sit down and talk to somebody, it makes sense, it's affordable, and that's where the plan comes in. Around 35% have adequate care.
In our personal situation, it was estimated at 20%.
Yeah, that could.
Like in one nursing home situation,
Wow.
our family was told that 75% is our own government program. So they spend it out of their assets. Yep, and then the other 25% just, they didn't pay, so.
I know my brother's in-laws, they bought long-term care insurance. The first year was offered from a traveling salesman that came to their farmhouse, and they bought it. The kids thought they were crazy. Like, why would you spend that kind of money? You know, you got to buy this.
We lost everything.
Because they were trying to sell more, so I go, hey, you're gonna get like a month there, wow, you should get much. Yeah, but that paid out its wages preserved their estate, so finally one was passed, and the kids still had a chunk of money in there, they'll do whatever they want.
I hope to God that I don't ever have to use long-term care insurance. I hope I have a heart attack in my sleep, middle of the night, and I'm gone. That's it. Like, I do not want to have to use long-term care insurance. No. But I have it. It's just like having house insurance. I hope to God our house will burn down. But if it does, I'm going to insurance to cover it because, well, it's really expensive if I don't. That's the easiest way to look at long-term care insurance. It's not something everyone has to have. The state requires us to be on a house, to have house insurance, or to have, house insurance on it, to be on it, but I personally hope I never have to experience using long-term care. I hope I have a heart attack in the middle of the night. I'm okay with that.
Remind me to get some insurance on him. Yeah. We're gonna get some life insurance on him, Pat. So a couple key terms I want to go over. Make sure you understand. So when we talk about it, we have a pretty good understanding. Available benefit. So that's the pool of money that you'd be available for in the long-term care insurance. So when they say pool of money, the available benefit, that's what that's called. So that's what the amount of benefit you have. Sometimes people will do it. You will see it daily on contracts or monthly, or annual. You'll see one of those three. Benefit period. That's how long it'll pay out. You can have one that pays out 2 years, 8 years, or however you want to. That's the benefit period. Comprehensive care, cover for multiple care settings. Like we said, home care, skilled nursing care, nursing facility, adult daycare. That's the comprehensive care. Inflation protection. We've got several options on that as well, but those are something you want to ask. You want to make sure that you have inflation protection of some sort, depending on the age you buy it, and making sure that you understand what that inflation is and what it means. Shared care rider, that's for couples where you buy it together. We have that. If you buy it together, I think it's a 20% discount when you put it together, something like that.
All of these are just common terms for long-term care insurance that hopefully somebody, when you have a conversation, somebody else just have the conversation with their available benefit, that pool of money. Typically what you will see is, for example, a $10,000 a month benefit for 3 years.
Very.
When it, so let me take a step back on that. When I first started this 10 years ago, Denver had an incredible policy, 5% compound interest, the premium on it was minuscule. I can say, I mean, it was just, it was one of those things that see it, understood it, the premium was amazing. Thrivent came to us 5 years ago, and brought long-term care back to us, Thrivent. I looked at it and I said, there's no way I'm ever going to go about it. Denver was just unbelievably better product than me. So it was almost double what the premium was for the same kind of policy. There's no way I'll ever get those. I'm just not going to go sell them here. Fast forward a year and a half later, they're sending out rate increases that are 20, 30, 40% of their existing clients. And the policies that they're selling now are nearly impossible to get into. The underwriting requirements are insane. They don't want anybody on there had a headache ever. They don't want, I mean, it's just, it's ridiculous. The premiums now are legal dollars. So I thought they back and said, look, we have a competitive price, we're going to lock our price, and we're going to guarantee it to you. They do a lot of really unique things and great things about it. It's a great competitive product. Not something we want to talk about with all products, but I think it's just another thing.
What is the youngest we see in current class?
I don't think anybody under 30. 17, there's some people under 30.
The cheaper would be one.
Are there three plus expenses? There's three total.
Right, most of the policies where you're due before 60 or before 65.
It's not
The premiums are different, and an illustration will show the different ways and
So take action. Start the conversation. Have that conversation. What's important to you? The consequences of not being prepared for you and your family. Whether your strategy reflects your faith and your values. The strategy to pay for your long-term care is one of the greatest gifts that you can give yourself and your loved ones. Develop an extended care strategy that fits your financial goals. Help initiate the tough conversation with your kids or who's going to be giving you your care. Understand the value of a care coordinator and ask the questions that determine long-term care insurance is right for you.
we've seen a lot of progress in the last few years. Some of us think, I want personal care insurance on there. Mine are in their 40s, 50s, and mom and dad are both state retirees. I'm 50, so mom and dad just can't afford it. But we work, me and my brother, or me and my sister work, and I can't take time away to go help mom and dad
It's very situational, and one thing we do with our clients is we make sure that whatever happens, we're going to create a plan. Whatever, if it's not long-term insurance, then it's going to be something. We're going to find a way to create the plan that we're looking for that makes sense. Makes sense financially. That's where that comes into. We're going to do what makes sense, and each case is different. Not everybody's going to be able to get long-term care, but we're going to. The biggest thing is creating a plan of how we're going to pay for it or how we're going to situate it if something does happen.
So do you recommend shopping around for different policies?
Absolutely.
Different companies?
Absolutely.
I mean, so it's not completely random.
Absolutely. But make sure you're comparing apples to apples. Because I've seen a lot of stuff where you get a quote from somebody else and then you come to us and ours is significantly higher, but give us a chance to explain why. Or vice versa. Make sure that all the benefits and everything is the same when you're shopping rates or shopping companies. That's the big thing too. I see a lot of stuff where you don't have. We're comparing A to B, and that's just it doesn't work.
Make sure you understand the rating of the company as well. Just understanding that the company might be a C-rated company out there, might have a little less, the premium might be lower than a company that's A or A plus plus rated, to the standpoint that they may or may not pay the cost of their claim out. Just thinking going into that, make sure there's great companies out there. Some of them will tell us, like, look, we find a better cost for you. Take those costs. That's just go to Thrive. We want to do the best we can. Jacob and I are young in our careers, and this is something we want to be doing for a very long time. Not interrupting something we can care about. Not just from the standpoint we want to do this for a long time, we just want to work with you. Going back to who Thrive is, we've been on a since 2012, getting a great most ethical company. 2012, when we were put on that list,
That's when it started.
we were the only financial institution that worked with beneficiaries. There were 4 other financial institutions, but they worked with corporations. And great companies on their head. Doing the right thing. Being a good person. Wow! What a concept. But that's what's important, is doing what's right for people. And making sure that they have different opportunities and the best opportunities they have to have. Any other questions?
Well, it kind of boils down to this has been, sorry, we'll change it maybe a few years, whatever, intended to be like, this is just one of the tools to
Draw good maps if you do that. Also, don't will. Wills are great, but there's also one more step after a will. You need to make sure all your beneficiaries match. So whatever the will's great, and everybody thinks that's going to supersede a lot of things it won't. Whatever's on that piece of paper that says beneficiaries, is who's going to get paid. You need to make sure you have a beneficiary. I call it a beneficiary checkup the day after your birthday every year. You need to make sure your beneficiaries are up to date, and you need to make sure you have beneficiaries on everything you have. Keeping stuff out of probate was a huge deal and is a huge deal for people. Not just in the essence of it's public knowledge, but it's also going to take a long time it's going to take 9 months to get out, and you're probably going to have to pay an attorney anywhere from $1,200 to $1,700 to help you do it, because you're going to have to close that estate. Yeah, it's public knowledge. So those are things you want to make sure the beneficiaries and what you have, because I see a lot of clients that's got a will, and then I've still got an ex-wife or somebody as a beneficiary, and I'm like, might want to change this. Might want to change this.
We had a client 2 years ago. She called. Well, I've been calling her husband every year. So we need to review contract insurance. What's the different terms? I've just got insurance policy last 25 or 30 years. 30 years plan last 25 years. Call them, and Sarah calls me and goes, my husband passed away. I hear that. And then again, Sarah.
Mm-hmm. You might have to go all the way to Canada for that, buddy. Yeah. Yeah, you're going to have to go to Canada, I think. They're always nice over there. Guys, thank you so much for your time. We have some appointment stuff back there. If you want to sit down and talk more about it, we'd love to talk to you. Thank you again. If you have any questions, again, our contact stuff is in the folders. We look forward to it, and thank you for... One more time? I'm sorry. Call the office. Email me, jakin.fox@thrivent.com, Jakin. It's a weird name. I'm right pillar of Solomon's temple. Remember that. Look that up. That's biblical. Our phone number at the office, 336-794-1592. Give us a call. We'd love to talk to you about any products that you may need, any long-term care, or any financial products. Thanks for being with us. Sorry if the glare off my forehead blinded you on the computer. I did wax it before I came. And God bless and have a good evening.